Hi, welcome to the Market Alert for Thursday the 30th of April 2015. And starting off in the pre-market session today, as opposed to from 2:30, we can see at 1:30 that we had the advanced GDP figures released by the US an hour before the market. And what was quite significant here is that the previous was 2.2, the forecast was lower, and then the actual figure came out even lower. So a massive drop in the advanced GDP figures, which of course had a negative impact on the market. So let's just have a look at the chart and see how the market reacted to this. So let me just fast forward here. So you can see there's the 1:30 news there, and then the market gets the reaction of the news and prices are marked down. Now, as I've said before, they don't want this market to go down, and any bad news, whether it's in the pre-market or in the actual trading session, will be used to actually shake out and to wrong foot traders. So you can see in the pre-market session there, we've got prices being marked lower on the economic news, and then we see a PTI buy signal there, knowing what's in the background, showing that the market could move to the upside there. So you see prices moving back and trading up to the first psychological level there, which is 18,050. Prices then struggle a bit there and then continue to drive on all the way back to the recent high, and again you can see that V-shaped correction. The remainder of the session, having got this move out of the way, really wasn't worth playing with. As I said in yesterday's market alert, the market is going to be waiting for the Fed chairman to actually speak, and then you see the market sort of trading sideways. There's a couple of economic news items there that we also spoke about, prices being marked back down before they're marked back up, but no signals there. We get this short signal here, but as I said and warned in yesterday's market alert, that the short side wasn't really a good side for the market, and there you'll see prices turn around and move back to the upside because of it. That's why I gave the warning. So the market then just traded sideways, and again to lower, waiting for the Federal Reserve chair to make comments. You see prices coming all the way down there. What they were doing here was marking the market down on the basis that she would come out with something positive at 7 p.m. You can see the market being marked back up there just beforehand, and then you'll see a potential buy signal coming in at 20 minutes to 7, which is a bit close for the market to actually take this trade. Again, the most powerful and the most high impact news item is the Fed chair actually speaking. Even though the market goes on to close through this one, it is a bit too close to speaking, because if anything is leaked beforehand, which is not unusual, I've seen it many times over the last 20 plus years, you can see prices go south very quickly. But on this occasion you can see the market moving back to the upside there. Then you start to see the minutes being released into the market, and then what's happened because of those advanced GDP figures, and as I said again in yesterday's market alert, and I'll say it again, I cannot see for the life of me interest rates going up in the US, certainly not this year, even though the speculation of it going up in June, and with Max Kaiser, Peter Schiff, Gerald Celente and many others who know that behind all of this is a massive debt and there's no way they can increase interest rates. And as the advanced GDP figures show, the whole thing is just an illusion anyway, because 2.2 previous, forecast 1 and 0.2 is showing that there's no way that this recovery, or so-called recovery, which of course is 7 years down the line now, is not going to happen. And that's the same in the UK as well. It's all pure conjecture, mainstream media hype, and politicians and bankers that are keeping these markets in these lofty levels. So you can see for the remainder of the session there is no reaction after, because the market doesn't know what to make or what to do now. And Yellen obviously didn't say anything about interest rates during a speech yesterday. I've not seen any of the notes had she have said there was not going to be an increase, then the market would have gone up and vice versa, but nothing from her as far as I'm aware. And the market's reaction is there to be seen as well. I mean, it's an unusual reaction from such a major news item, and that's because, like I say, there's a spanner being thrown into the works with the advanced GDP figures which were released beforehand. Right, let's have a look at the daily chart, see how that looked following yesterday's FOMC minutes. So in the daily chart, you can see yesterday we have some selling coming into the market, a big price bar there in the volume window. Market coming off the lows though, which is always an interesting type of price bar, because generally the market moves higher following this type of price action. However, that said, the fact that the market has nothing really major to move it to the upside, we could start to see a switch to the downside in the short term. Because of the figures that were released yesterday, and also this postpones the chance of any interest rate increase that it wasn't likely anyway, but that's how it'll be interpreted by the media. So we're still stuck in this sideways range, and again, it's going to be a difficult one to call today until the market actually factors in what was said during yesterday's FOMC minutes. But certainly the price action is indicative of prices to move higher, but there is that slight uncertainty in the background, because it begs the question of, with these figures being so bad, the economic news being so bad, is whether they may consider further QE in the next few months, which of course is why the market's sideways. It's waiting to see what the Fed's going to do in order to get the economy going, which obviously is starting to fall off a cliff again. On today's news front, let's have a quick look. We've got 245 Chicago PMI. This is to show an increase in activity from 46.3 to 50.1, and if that does come out, that will be used and upgraded to a high impact to move the market back to the upside. So it's a case of having to watch and wait for that one at 245. And finally, in the implied volatility, 1141 for Tuesday. Wednesday's implied volatility 12.11, of course, as the market moves sharply lower in the pre-market session, adding a bit of a potential downside risk there, which you can see in the chart. But the blue historic line coming back down towards and below the implied volatility line there. Right, that's it from me. I will see you in tomorrow's market alert. Have a good day, and as ever, thank you for your support, very much appreciated, and also for watching. See you in the next one.